What's up, guys? Welcome to the stream. See, you got a good little group of people on Discord and YouTube, people filtering in. Let me know, how's the quality? Somebody give me a yay or a nay. What's up? How's the stream quality?
You
Because
look great today.
thank you very much. Wait, me or the chart?
The chart too,
Okay,
but
good.
yeah,
I was
mostly you.
testing. I was looking on my phone and I forgot to make sure my
It's a lot
connection
of
was good.
colors happening, but it looks
Yeah, it's
good.
pretty, isn't it? Okay, we'll go back to the normal thing here in a second, but I wanted to show the red and the green of the Nasdaq today. How about that dip? Eh? Like that is the story of the week, isn't it?
Tasty dip.
Tasty. Yeah, that is
Tasty
tasty,
dip
man.
for now. We'll see what
I
happens, but they followed through today for sure. They closed above the halfback with authority.
the what?
They closed above the halfway mark of the retracement with authority.
Oh yeah, oh yeah. Definitely gonna dig into that and take a look at it. Really, like yesterday and today, the trade was get long and stay long. And like, would you have? Well, okay, you and I both. I mean, we know to expect something like this to happen because of how crazy things can be. But I mean, do you think most people would have expected on what was it, Wednesday, that we would be here today with this kind of price action?
I'm not gonna lie. I thought we were gonna bounce earlier in the week, and when we
Mm.
tanked, I was like, "Oh man!" But I think to your point, most people don't think this way. But when you're looking into the abyss, right? That's when you've got to find a reason to buy, or at least try to buy.
It's funny, I was talking to Amer, that night, Wednesday night, and, he messaged me or I messaged him, I can't remember, and he said that he was trading, and it was, like, late at night, and I was thinking to myself, like, "Ah, God, here he goes. He's just, trading into the wee hours of the morning, just losing his money." And then I asked him, thinking I knew the answer, "So how are you doing?" I expected it to be like, "Oh, I'm just losing money." But no, he's like, "I'm doing well this evening, better than I did today." And then I went and looked at the Nasdaq, and it was down like 2.5%. And I was like, "Oh, wow, that is quite an after hours move. You don't see that very often."
Yeah. You got a trend evening, and if you were on the trend for the evening, you are not unhappy.
No, no. If you stayed short into it, you were very happy. But I think a lot of people got a little too over happy and forgot to take profits, though. I think there's a few people out there that did that. So yeah, now it is a very interesting little spike. I live and die by the spikes, and I noticed that at the beginning of the day, basically the close yesterday. This is the Nasdaq right here, how it did the spike. And actually, Les, I was gonna walk this through here. The reason I had these lines up here was for to see like where's this thing going to reverse. I was looking for like a day trading setup, um, anywhere from basically the bottom here to the mid range here, and it's hard. There was no trade on this except get long at the open on Thursday. You basically just had to get long because it didn't give you any sort of pullback right here, and so you just had to kind of get long and stay long. But now, as far as the Nasdaq goes, because it's kind of the most clear of this, I live and die by the spikes, and the way I see this is we now have a false breakout, a breakout to the short side that has failed. You got a bunch of people thinking one way, panic, capitulation, whatever you want to call it. And how you're going to define that is by looking at the low right here that we made on the 24th, which is going to be the defining low. Uh, and that is going to be what we spiked below. Now that we closed above it, we closed back above the 9 period. And as you said, we also closed below closed above the 50% of this retracement. I'm, of course, a little,
Even if you go back a couple more days to the higher number, we still closed above that. Like there was no doubt.
yeah,
See the higher
the
candles
low that we
hanging up
made right
there
there. Yeah.
on the left.
Yeah.
Even if you go left more, like the one little doji candle hanging out there, even if you draw it from there, we still
Mm-hmm.
close above that.
Yeah.
Doesn't matter where you draw it from.
And hindsight being, of course, 2020, the thing that I have been looking at for weeks in this correction. So you had the down move, which pulled back to the 50% here and closed as like, the last week of January, or maybe it's the first week of February, whichever one this weekly bar is. That was your signal. Hey, look, it's going to have some more downside. And now the reverse is true. Now we held the 50% to the upside. So The good thing about this trade is I can say with confidence, I don't know which way it's going to go, but I do know where my risk is. And how I define that is basically this low that we put in on Thursday is going to be the low. As long as we hold it, I'm going to be bullish. If we break below it, then that's a different story. That's okay, well, now we look to go short again. But knowing that that is the level that we get out and we go bearish again, we know where our risk is. And so we can define a risk. And so if you're in futures, if you're in the QQQs, that kind of stuff, then a really good trade is to grab it and try to get it back up to the high. Could take days, could take weeks, could take months. Depends on what the tenor of the market is going to be. But now we can define our risk on this right here. So I don't know what will happen. I do not discount the fact that we could just go, we can just get very much at attention and then go flaccid again into the stop. But I know where the stop is. I know where we go bearish, and that's breaking the Thursday low. It's very clear. It's very, very clear. So, yeah. What are your thoughts, man? Usually you have to go early, so I thought if we give you a chance to talk early.
Yeah, I think it was quite the rally. But what I noticed looking at the market as it actually went back up is that there was a lot of initiative yesterday. And what I mean by that is, like, it wasn't just a short covering rally, although there was certainly plenty of that. But every time that there was resistance from sellers, and you can see this on a profile chart, volume profile chart more easily, but the buyers were just lifting the bid over and over and over and over again to break through. Like, they were not being denied. So there was a lot of sellers that were selling into, and it could have been some profit taking, but you can see in the profile chart where there were just icebergs of sellers trying to stop this thing, and the buyers just plowed on through, and then they followed through today, which is something we haven't seen recently. So I have the same. I'm not saying that's the end of the correction and we're not going to go down again, but we haven't seen in the past 2 weeks, 2 consecutive days of strong initiative buying. We saw that after the dip on 124, like that week that we broke back out of the range. We saw 3 days of that in a row. But since then, we haven't really put together 2 days of buying like this.
Mm-hmm.
So, I think we'll probably have a pullback, but then the question will be, where to buy that pullback. Certainly, but There was more initiative from the buyers than there has been. Didn't look like just short covering today or yesterday.
I would really like to see a pullback to this rally and then it hold to confirm. That would be the ideal situation would be maybe coming back to test the low, and then you would know in this area, like whenever it got to a support and held it, that would be a really good sign that it has tested. If it bothers me more if this thing just rips up to a resistance and then comes back down. So yeah, I'm definitely looking for some kind of a pullback next week.
Wish we had a pullback today. I would have felt a lot better about everything
Well,
if we had pulled back and bounced. Even if we
you
closed
kind of
lower,
had
I
one.
would have liked that.
You kind of had one here at the open, where
Yeah.
you had the close, the defining close, and then where was it this morning? But it definitely wasn't clear in here. I mean, this was your pullback. I mean, here's your close, did a little pullback, and there's your confirmation. I mean, unfortunately,
What would have been beautiful is if we had pulled back to that January low
yes,
and then bounced. That would have been
right.
so nice, but they can't always make it that easy on you. I thought we'd go back to at least 42.20. That's what I had my eye on.
Well, if
But
anything,
we never got to that recently.
the last couple of months have made you distrust rallies, haven't they? Because
I was hoping that we would get a pullback into the rally at least. I would like that better. I mean, this is just like they just blew through these areas, from like 4,200 to 4,220. They just blew through it,
Mm-hmm.
So you would think that they would come back to at least check things out, but if they don't, I mean, there's no gap, so so be it.
Let's see here. What else we got? All right. I think crypto did basically the same thing. Man, that was quite a rally there too. I don't really see a setup on here as much. Wind Moon.
Crypto just checked out
Yeah.
the low, and like to the penny, Bitcoin checked out that low from like the from January 22nd. I know they overshot it 2 days
Yeah.
later, the 24th, but like that kind of 34,000 area seemed to be
Mm-hmm.
the spot. I have a big fat line drawn at 35, but I didn't buy any
Well,
crypto. It was like that zone.
the line in the sand is basically still the 36,000. And that's, it's kind of sort of this range, but it's more really, in my estimation, the halfway point of the COVID low up to the all-time high, which pretty much defines everything in this year, the COVID low and the all-time high. Across the board, every single market, those 2 points are the trend points. And so now almost everything is hanging out at the halfway point and deciding, is it going to hold or not? And so everything's doing it. And so, yeah, it did come down to that point and hold it. There's a little subtle nuance in, going back to my Ichimoku days where, the red line that I'll only have on my chart right here is a really good trigger line, because what you see here is the halfway point of this little reaction, which of course I always go on. And then you see where it forms like a little curve, and that's going to be more my target. Like if I was short this, then I wouldn't be trying to target this right here. I would be more trying to target this level, just more the kind of the meat of this price action. And that then tells me this is holding a support, because this is the daily. And then if we go to the weekly, well, it's even more clear that it's still holding that support. The only real worrying thing about this is it also held topside resistance on the weekly right here. But I think that's actually less strong than the bottom side right here. But either way, Bitcoin is still caught between, let's call it 43 and 36. So yeah, a lot of
Yeah,
confluence down
they
there.
gave,
You're right.
they gave us lots of good setups this week though, or yesterday for sure. A lot of
Hmm.
things came into some pretty key levels all at the same time.
Tech that's one of the things I wanted to really look at, the major tech stuff. Apple. Oh, look at that weekly bar on Apple. Hold on, let me clean this up. So Apple, when I was doing a video earlier this week, I had drawn again the COVID low to the all-time high, and that would have put the 50% retracement on Apple at 118, which, anything's possible. But on the shorter duration, what I thought was really cool, and this kind of goes into the whole, nuance of where you draw it. Um, the indicator, the retracement indicator, draws the retracement from the low that it made in June before it's made this leg up. And Apple came down just to ping that level right there, 152.50, which is a past high roughly here, but just basically that zone. I thought that was really interesting. Google did kind of the same thing, where it came down and got to its a 50% retracement, but it was more the low that it made on the 24th. And I was able to actually get some phone calls in and get some more Google. That's one of my highest conviction trades of this year. And so another one, kind of more obscure, I bought garbage, which was waste management on this dip. That was really only the stock play that I took on Thursday, because it was the only real signal that I liked. But yeah, and then Nvidia did the same thing, came down and tested the 24th low and just flew right off of it. I don't think it's quite out of the woods. And I think finally Tesla, this is the interesting one, because it got down here. It got down to, was the 700. I think, oh, was it? Cuz was talking about he had an order at 700 and it didn't fill, because I think it literally was 700.
I think
And
it hit it pre-market and then opened at like 7.0 something like
well,
that.
let's take a look. Hang on. Let's actually dig into this, because that's kind of interesting. The thing is, it's a limit order, and so it doesn't guarantee that your limit order is going to get filled. Let's take a look. But yeah, either way, didn't get it. And that's almost kind of a lesson in not using nice whole numbers in your orders. I mean, rarely does it matter, but in this case, yeah. So the pre-market 691.95, And if you had your order in here, the low, the 1 minute was 700. So it probably opened, it looks like it's 762, came down to 700. A bunch of people probably had their orders there. And yeah, it just flew. So rip if you didn't get in.
That's the don't be a prick for a tick saying.
Don't be a what? A prick for a tick? Yeah.
Yeah.
Or what is it? Penny wise and a dollar short is another way of saying that. Yeah, you got to. That's why when I talk about using that sort of on going back to Bitcoin, this is just an example of using that Tinkinson turn as kind of a resistance point to play. Where is an example of that? It's just a safer way to play your targets. If you're playing some kind of a resistance, if you're trying to get a profit target, like for instance on, can we see it better on swing trading? Yeah. So if you had been playing this up, which I think some people were, getting into this move. I know a lot of friends that were getting very leveraged up on this move from the 24th on Bitcoin, especially in here. Like when it started doing this mess, oh my God, I had so many people bragging to me here, and it's just almost like clockwork that they're going to get effed. But notice how when you start topping out right here, you have this little bit of reaction, which sets up really what it's doing is you have the meat of this price action and the 50% of it. And that's why it's just smarter to play off base, not be greedy and try to get what's left up here. And that's what this is kind of based on. Like when you see something top out like this and you want to see price come back to retest it, don't be greedy and try to get all the way up to this proper high because you're probably going to miss it. The safer is to take off some risk, take some profit at that meat of the trend, right? So that would have been a good target there to play, or even in some of these cases to short off of major highs. I mean, essentially it's a lower high, but this is the way that I quantify it by looking for, okay, where's the major high and the major reaction? I'm drawing a lot of lines here, but where's the high and the major reaction? The 50% of that, and that ends up being a really good place for price to turn if it's going to be naughty and not actually get up to the proper high. So watch for that. The V point of control lines up at the 50 there. Is VPOC an indicator on TradingView?
I don't chart that on TradingView, so I'm not sure, but it does have some sort of volume profile that you can.
Okay. So what's up, Josh? Gold and silver. I know you're not trolling me, are you? Well, I mean, look at my watch list right here. What is the only thing that's red? I talked to some people this week that were looking at a gold as a breakout. They asked me, "Hey, Wes," and remember, gold was. I mean, this was a big green bar as the Thursday was going along because Russia's invading, reasons gold go up, right? That was the trade. Reasons go up. And they asked me, "Do you think that this is a breakout?" And I said, "No." Because as I've said, for weeks and weeks, gold has this, not nasty little tendency to get into these half-decade consolidation periods. In between those periods, you have trends which can last for 2 or 3 years, and then of course it does its, decade-long consolidation. And here's another 2-year. These are weekly charts, by the way. And so gold is literally a boomer instrument. It moves very, very slow. It has no momentum. It takes a lot to get it going, and it's very grumpy. Okay, I'm going to stop with that analogy. But for this to be a breakout, really, really and truly, it's got to break the all-time high. It's got to break 2,100 an ounce. And this was dangerous. I mean, now I'm getting my spike signal because you have a false breakout. A lot of people thought this was going to go long on this news. And so the things that are really getting killed are the war trades, the oil and the gold Now, as far as oil goes, real quickly, what have I been saying for weeks? $100
You know
oil.
what was very interesting about oil yesterday was
God, this was a good
ExxonMobil,
short.
Chevron. They were all red yesterday too.
Yeah, look at
In
this.
the beginning of the day, they were all red.
Damn. See, I had a call this morning with the TradingView people to talk about this panel. Didn't get to trade today. Look at that. This is a short. I mean, you know where your stop is. I don't want to trade the futures, but this would have been the instance right here to definitely close the UCO. Are you still in UCO?
I closed UCO. I did get an entry on Wednesday morning in oil, and then I got stopped out while I was asleep,
Yeah.
unfortunately.
Okay,
But
so are you
91.47 in oil is,
so
is my hit.
you have acquired the testicular fortitude to take futures now?
I will use micros because I was asleep,
Yeah.
and I just I feel more comfortable doing that overnight if I'm not looking at it. But I set a bad stop. I got stopped out at 90.7, I think it was. Entry was 91.2. Stopped at 90.7. Low was 91.64, and then it ripped to $101 or whatever it did.
Oh, so you were trying to get in before this
Oh,
rally?
oh yeah, this
Okay.
was Wednesday, like at 4 a.m. If you looked back in
Yeah.
like a 1
Oh,
minute,
you know
5 minute
what? Do I
chart.
see it here? I do, don't I? Look what they did to you. I mean, what a
Yeah, well,
great.
that's why I was a little nervous about putting on real risk on that because
Yeah.
I knew it was a good trade. But as we've talked about, oil loves to spike its levels, so I gave it some play. And if I had been awake, I probably would have given it a little more play. But I just had to pick a number at some point, right
Mm-hmm.
below the prior low. I knew it was going to spike the prior low. I just didn't know how much, and
So
sure enough, it did,
off
and it got
this
me.
off this level, as I said, yeah, it's kind of hard. Let's see. Hold on. It's kind of hard to find that, off base playing there. I would say right here would be the target. And so if we bring up our risk, yeah, the stop coulda, shoulda, would have been 90.15. And then
Yeah,
you could have held on to it until the next day, maybe taking one off if you had multiples, and you have been in for the rally. So that's why I do the 3-to-1, because it lets me say, okay, where's my target? I know your style is more intuitive, but that's why I kind of lock myself into it, because then I know where my stop needs to be to make it sense, right?
yeah.
So
This is just also I knew it was going to fire down. It was going to fire down below, and at some point I just didn't want to. There's only so much money I wanted to lose in the trade too, to potentially risk on the
yeah,
trade. So that was kind of I was. I mean, I wouldn't have done it any differently on if I was doing it again.
no
But
regrets.
I maybe I would have done it when I was awake. Although I would have taken there was another back test in the morning of if you want to draw a line at 91.47, it actually did touch it again. I just didn't
91.47.
see it.
The second one there in the afternoon.
91.47. Yeah, you see it,
Yeah, I see it. Ping. Yeah.
and it did it again this morning too. It pinged it again this morning. 91.47 is the spot, in my opinion.
Well, it's fighting it now. It's at 9. It closed in price today at 91.81. So we
Yep.
shall see. But I mean, I'd have to say, like, I don't like trending spikes. Like if this spike had happened on this bar, like in the run up, I would say no, that's just volatility. It probably will still go up more. But the fact that you have it establish a high back here on the 14th of February and then hold it like with this, and then today, that's I mean, this is a pullback. This is going to be a pullback in oil, and if I Ichimoku it up, really want to see it get below the Kijisen, but it'll probably come back to, I would say, yeah, probably come back to retest the highs of October 2021, which would be about 83. But I don't think that kills oil. I think this is just going to be a pullback. I'm not getting out of my oil stocks. Um, I don't think. I think it's bullish. It's still bullish. It's just there's a short setup for you to try to grab. Let's see what else is on the docket today. Yeah, let's look
And
at it.
one more comment on
Oh, go
gold is
ahead.
that the
Go ahead.
people who are gold bugs, my only
Hmm.
opinion is if you're gonna, I would never tell someone to trade with leverage, but if you actually want to make money on gold, you're gonna have to apply some leverage. Otherwise, you're gonna be dead before you make any money on gold.
Yeah.
I'm just not sure that it's worth it as far
So
as where you could make money elsewhere.
let's see. Let me make sure I got my got my account up. The one thing about gold, if you're trying to express a trade on gold, um, this is Thinkorswim chart with the implied volatility. One way that people can express it is with the GLD, which is the ETF for gold, and then it has options. And one of the ways that I had a friend of mine that would trade it is he recognized that gold has a tendency to get into some of these really tight ranges, and so you'll see IV get very, very low. Now, if you can catch it getting out of that range, IV will go up. The movement of gold will go up. But for the most part, what he would do is he would take very, very long term, like leap positions on gold, like a year out, and he would do that in periods like this, like summer of last year, low volatility. He would just eat the theta, but eventually he would get a pump with the volatility, and he'd be able to make up for it. So that's basically what it's doing. The volatility is now rising on gold. So if you do start to see a pullback on it, we'll see what happens there. But for right now, I mean, I think a lot of people that try to jump into it, it's rough. I don't know what to say. If it breaks the high, just like if the market breaks the low, if like the Nasdaq and the S&P, if Bitcoin, all that stuff breaks the low, then you'll probably see gold do the inverse. That also sets up a pretty interesting pairs trade. Either long gold, short Bitcoin, or short Bitcoin, long gold. Because clearly, just from this week, you see that there's that inversion between the two. Yeah. So we're back to, for now, we're back to risk on, basically. So let's see what else. Oh, by the way, if you have comments, the viewer, either on TradingView or YouTube, post your questions and things in the chat. Discord. Oh, we got a good number of people here today. Yeah, make sure you join also, because I don't actually charge, because I don't need your money. I just want to talk to people on Discord, and we do trading every day now. Actually, we've been very consistent with that, and so trading futures every day. Come join us. All right,
making money with friends, and sometimes not making money, but mostly making money.
It takes a few to get. It takes a few at bats, right? It takes a few swings to get in it, doesn't it? That's within the last couple of 2 months. Yeah. I think
I mean, this is a fun time to trade because there's a lot of movement.
Yes.
It's a little scary, but
yes.
really fun.
Yes. I can't stress that enough. Listen to old crotchety me. This is a unique time in the market. This period right here, where you have all this movement, just the ranges are so big that you can come in on a short time frame and find a big chunk of money and just pull it out. When the range tightens up, when things only move a few points in a day, it's just going to tear your account up if you try to actively trade. You got to be super disciplined, super patient, because there's a lot more money to be made in a 100-point move than there is on a 30-point move. And when we get into summer, most summers, you get down into that 30-point total movement in the day. And what are you going to be able to pull out? You might be able to pull like 5-10 points of a good setup in there versus the 60 points that we're able to pull out now in the last 2 months. So I'm actually really happy that we had the movement that we did, because this gives us probably another couple of weeks, maybe more, maybe a few weeks more, of really kind of figure out what we're going to do. So there's going to be a lot of up down movement, and then come about May, sell in May and go away. How to stop over trading? Well, that's a good question. First of all, have a strategy, and then be picky. I mean, also recognize how much money you're paying to your broker. Honestly, I don't. Over trading, like I said, is going to bite you a lot more in the slower times. I'm not mad at people. If you're making money right now, taking a lot of trades, I can't say anything to you. But you are building up a kind of a bad habit, trying to trade every candle that you see. You just won't be able to do that. You're getting a lot of movement because of the time of year, the volatility. You'll figure out when you're over trading, when it's just crushing your account, and you're like, wow, I need to stop over trading. that problem will fix itself. So either get a strategy and figure out what your best setups are. There you go. That's the answer. Like what is the setup that you believe in the most? What is the pattern that you believe in the most?
The pattern that you can see, like one that speaks to you, whatever it is, that you
Speaks
can
to you.
see that.
Exactly. Read those tea leaves and don't, and if your strategy is, I sit down at the computer and I need to take a trade, I look at two green bars and I buy. That's not a strategy, and that is over trading. I mean, figure out some little confluence of factors, and then try to train yourself to only do those things. I mean, I'll sit here all day and not take a trade. And then sometimes I'll sit here impatient, just like anyone else, and I'll try to, especially on these down moves, I'll be, try to grab the reversal, stop out, grab the reversal, stop out. And then, there was one in particular this week. I think it was on Wednesday, that big bearish day that we had. It was on the NASDAQ. And let me find it.
I'm
Yeah,
trying
it
to
was right
translate
here.
this setup into the short side, and we don't get a darn pullback now. All of a sudden, no pullbacks in sight. Past 2
Right.
days.
So here was Wednesday.
Got to
Here was
recognize the tape.
what's up?
Go ahead. Nothing
Oh,
important.
Wednesday, the market opens kind of crazy. I thought things were going to get really boring. Honestly, Wednesday of this, I thought things were going to get boring. That's how much of a fortune teller I am, because of the way that it opened. I saw this with no other context. Like, this is the morning open, and I was like, oh, okay. I guess the good times of volatility are over. Well, I was wrong. And this was how the morning went out. And of course, in this realm right here, I'm trying to, get long on like a pullback here and then stop out. I think I took another one here and then a stop out. And it finally got down to a level here at about 11:30. Now, if you guys watch, how we trade, when I talk about timing, it's like the heartbeat of the market. And 11:30 11:30, like when it is when Europe turns off. Europe goes offline, they stop trading. There's something about that time in the morning where you got the US session, you got the Euro session, they're both trading at the same time, and then one of them falls off. And usually a lot of these moves happen overnight. So this is the story for it. You got the Euros, they're either pushing it up or pushing it down, and then they go home for the day and price reverses. And so I over traded trying to play reverses because that's what kind of trader I am. I'm contrarian. I'm always going to be trying to play reverses. And then all I had to do was wait until basically that 11:30 right there. That's the bar. Boom, 11:30. And then that was the reversal for the day. Pulls back to the did I trade the ES because it got up and touched the 50%. I can't remember where I put it
I think
at.
you were in the ES in that one.
Yeah, I must have been. Same pattern. I don't want to have to go back and find it on the 1 minute again, but same kind of pattern where at 11 you had this hole from the open to 11:30. Boom. And so there you go. Oh, I overtraded. Because this was my setup. This was my setup too. And I'm looking back in hindsight bias to it. But if I'd waited for the best, then I wouldn't have had those two losses. I would have had one win for the day. And this win can make up for the losers, but I mean, you work out the overtrading. I mean, the fact that you're asking the question means you know that you're overtrading, and now you just need to figure out what your best trades are, and then take the hard plunge of only doing those. That's hard because I don't know. Play video games while you trade. If you can pay attention to both.
And recognize that taking a trade is also a big dopamine hit. So you actually have a physiological reason people do why they like taking trades. It's like gambling when you put on risk. So it can be hard to stop.
We're speculating. We're not gamblers here.
Oh, I said it is like when someone gambles. It is the same physiological response in your brain.
It is 100%. And I've been asked that question a couple of times, like, how is this different than gambling? And I have actually come up with an answer to that. The difference is with gambling, They both have the same emotional issues, like you said. The difference is with gambling, once you clear up all those emotional issues, you're still going to lose. With trading, once you clear up those emotional issues, you have a chance to win. So that's the difference. That is the difference between gambling and trading. Let's see. Let's talk about okay. So trading view comments. It's easy to stop over trading when you've been lumped on the head enough times. Yes. It gets easier as the years goes on. Yes. How do you think I can overcome greed and fear in the market? What is the best way to spot support and resist? Okay. First question: how can you overcome fear and greed? Have a strategy. There are some people like Manaconda who are, and I pick on him because he has a very even keel of emotion. You can just hear it when he talks. Have you ever been mad at anything?
Of course, this just doesn't get me worked up for whatever reason.
So that's why he's able to come in and do intuitive trades, feel it. Go in and you know, I myself, I'm emotional, and as you said earlier this week, I'm always grumpy. I'm very grumpy, especially when I lose. And I fall into the fear and greed too. And that's why I have these little things in my toolbox. Like I said, I don't know if you were here earlier, Chef Key, but I talked about when you're targeting something. Let's say you're in a trade going up, and your target is the high, a past high. You don't want to put your order right on that high. You want to play off base a little bit. That is something that keeps you from being greedy because the greedy person, they want to uh, get the high, the most they can get out of it, or they want to break that high because they want more money. I try to play a little bit off base, and so I have a rule that I look for, my target to be a little off base, and that keeps me from being greedy. I see so many. I was talking to a friend of mine last night who's got into this cat coin. Yes, it was in hindsight, it was obvious that Dogecoin would then turn into Catcoin. And I don't want to pump it, but go buy it for make my friend richer. Anyway, he got it. He has something like almost 1% of this damn Catcoin. Not excuse me, 0.1%, a big chunk. And can I even bring that up? Hold on. Let's look at it. Hang on. I will actually talk about it because it's topical. So basically, it is what it sounds like. They literally they saw the success of Doge, and Shiba Inu, and a genius, an absolute freaking genius, came up with the idea of Catcoin. And so my buddy, he got in a few days ago, and at this point, he put in I think $1,600, and at this point, he was up to like 70K. And then last night when we talked, he was about 40, and I was like, okay. And he was sort of asking, but not asking me what do. And I tried to relate to him this concept of all these memes where how much is enough? Okay. You took $1,600, which is basically a new phone, a really nice new iPhone 13. It's actually a little more expensive than iPhone 13. And you now have a car. And I said, well, what do you want? And he said, well, I want to buy a rental property. And I was like, okay, all right, well, you have your target. But at the end of the day, you see these Wall Street bets people that, they that say they take a $5,000 account, they get lucky twice. Like let's say they bought some Tesla calls last year at some point. Now they have 50,000. They YOLO'd those into another Tesla call option, and now they've got $5 million. If you go from $5,000 to $5 million, you go to a point of life changing money where you don't have to work again, and you then go right back into zero DTE options with everything. It was never going to be enough for you. You were that money, you were never going to have it, because that's the greed that I think does a lot of people in. And I don't know how to fix people. I'm not a psychologist, but what I would say is have rules, have a strategy. And in this case right here, when I was analyzing it to him, like I said, just straight up and kind of went in one ear or another. I said, okay, it came up to 65, 85. I can't chart this, but I can see where the halfway point is. And so I told him I'd be at about, I think, 4 or 5, wherever however many digits theirs are. I hate these things. But you can see there that you had the run up, you had the big sell off, and then it kind of held around the 50% of that level, and now it's coming off of it. Now, this is just the last week. We could look at this in a month or a year from now, and it could be 1 cent, and I could be an idiot because I told him to sell. But you had a freaking car, dude. Oh well. What is the best way to spot? Second part of your question: what is the best way to spot support or resistance? 50% levels are my favorite, and past levels. Like the support, as I was saying at the beginning. We'll talk about Bitcoin. I mean, we said here in the beginning, this is the one that everyone should be looking at. I'm sure everyone is. On Bitcoin, the COVID low is the level that we're going to all be looking at, and the all-time high is going to be the level that we're looking at. And so the halfway point of that Bitcoin is holding right now is 36,000. And this works across instruments. Like I said, on stocks, I bought Waste Management because it came down to its 50% level. Time and time again, you see these set up. So that is what I use. Now, as far as support and resistance goes, for other people that use other Fibonacci retracements, 50% is just how I've kind of locked my brain into it. And it comes from Ichimoku, which, by the way, NASDAQ. I take off Ichimoku because I like to keep my charts nice and clean. But I know I mentioned this to Vikstein, who I think she's in here. No, she must have dropped off. She likes to look at Ichimoku as well. And you can see this is kind of why I do 50% as support and resistance is because I come from studying Ichimoku for many years. And I don't really use it anymore because I want to have a nice clean chart like this. But basically what happened with Ichimoku overlaid is you have this move down, which created that 50% on the NASDAQ here, which is also the green line, which is the Kijinsen, is the 26 period 50%. And what you typically tend to see in a pullback is it comes to hold a level like this and then goes down to test the cloud. And I know if you notice, when I had those lines drawn earlier, one of the major lines was this little flat part of the cloud right here. Now, I don't use it all the time because this doesn't really match up with what I would call proper 50%, but it gives you a very good idea of where the trend is being contained. Going back to Bitcoin, on the weekly, right now, Bitcoin is holding the lower part of the weekly cloud. And the reason it matches up there is because oftentimes Ichimoku, being based on 50% resistance, will give you that flat part of the cloud right there. And so it's very, very clear to me that Bitcoin is at support in a number of different ways. But I know that if price gets down here, basically into the 3,200, you then get momentum also out here. If Bitcoin breaks these lows, it has broken support. I'm going to say it's holding right now, but you need to be watching. You really do. I'm not saying that just to be clickbaity or whatever. I mean, this is key. It very well could hold. I would expect it to maybe come back up into the 5,000s or 50,000s if it does. But if it makes a break below the lows, that is dangerous. That is very, 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 very dangerous for that. And so that's how I'm going to look at support. Does that help? Dog the cat. Are you in Catcoin? Dog the cat? Stops are not working for you. I feel, that's the key word. You feel like some of these moves are extreme. Do you adjust your stop range throughout the day or account for the time of day? So I guess the question would be, what time frame are you trying to trade at what time of day? I trade the 1 minute, 5 minute on ES and NASDAQ futures during the US trading session. I don't try to trade them at 2 o'clock at night. It's a very big difference there. Not only what you have, you've already kind of answered your own question of what's wrong. When you trade in non-liquid times of day, the bid and the ask, and that's what all markets are based on, bid and ask. Like, the bid is what someone's willing to pay for it, and the ask is what someone's willing to buy it for. And then if you have a lot of trading going on, then these bid and ask spreads get very, very tight. It can even be 1 point between them, and you get very good fills. And so if you are sitting here, how can I express this? Give me a second. Can I do this in Thinkorswim? Let's hold that. That's a good topic for a video, actually. Hold on. Because I have the benefit of, trading Forex. That's how I started over a decade ago. And then getting into the real wild west of cryptocurrency where you see the bid and the ask. I think a lot of people that are trading on Robinhood nowadays, I don't even think they know how much they give to their platform by taking a market order. And basically, a market order means it's like, I don't care if you give me the bid or the ask, just get me into the trade. And I think a lot of people do that. And brokerages love you. They love you because they absolutely screw you in there. They have very tight spreads, and they just take they take a little bit off each one of your trades when you use a market order. They love it. That's why when you have these free commissions, they're okay. They didn't stop making money. They didn't when trading went to zero commissions on whatever you're trading on, they didn't turn into charities. Oh, no, 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 no. They get you on the spread. So going back to your thing, dog the cat, what happens when you start trading in these non-liquid hours is the bid and the ask widen because not as many people are trading. And so if you are trading on a very short time frame, like a 1 minute, 2 minute, 5 minute, 15 minute, even like a 30 minute in a really illiquid time, let's just say that you're in the trade long here and your stop is here. Visual. Okay. So how can I visualize this? The 1 minute chart here. Okay. So I want to visualize this for you. Where is the trading panel? Data window. There's somewhere in here I can get a trading panel, right? Aha. No, I'm not connected to a broker. Okay. You can connect your broker and you can see the bid and the ask. One second. Bear with me. Okay. NASDAQ, the futures haven't closed yet. So let's bring this up. This is Thinkorswim. We can see. All right. So what you have is down here in the bottom, you can see the bid and the ask. And right now it's 93, 75, 94. Yeah, there's about 3 points in between. Okay, so it's still pretty tight on this. But what happens is if you put in, let's say, a stop order, let's say that on this chart, you want your stop to be just above this high. And so you set a stop at maybe 14,196.50. The problem is if you set your stop there, or if you set your stop close to it, what's going to happen is the bid and the ask may get up there, but if that spread widens, it's going to take your order because it's not that the market price has gotten up to that level. It's just that the bid and the ask has gotten up there. And so it's going to grab your order because that's what you basically told it to do. You said, if any price gets up to this level, stop me out. And so that bid ask will spread out and boop, get your order. And so that's what happens when you trade in very illiquid markets. You lose on the spread. So if you're going to trade very, very tight on like the 1 minute, the 5 minute, the lower time frames, you got to do it in periods of really high liquidity. If you try to trade Bitcoin here on the 1 minute in the last few minutes, you're going to get stopped out a lot. You have to really train yourself to know. Like, it's a feel, but I mean, yeah, if you're trying to trade the 1 minute on the big rally that we had yesterday, then you were okay, right? But you have to recognize when things have gotten a lot tighter. Like, you're not getting a trend here on the 1 minute. And so if you try to say, if you say, okay, this is going up, I'm going to buy it here, and I'm going to put a stop right here, just right below the low. Well, they take your low, they take your stop, and then they go up a little bit. And now you're like, okay, all right, well, I'm gonna buy it if it comes back down to here, this low right here, and I'm gonna put a stop right below it right there. That seems like a good risk reward. Boom, and they take that out and they come back up. You basically found yourself trading in a consolidation, and you that comes with experience. It also comes with having a strategy. Now, all that to aside, it's okay to get stopped out. It's okay. Stops are good. They are working for you. You don't want to be a degen. You don't want to be a bag holder. For instance, when I was trading this week on these reversals, I was trading against the trend on the Nasdaq. Let's actually bring up the ES. I talked about this earlier. This is the Wednesday, and the reason I'm talking about it is because it's bizarre. Because on a down day, what day was that? It was Wednesday, so it was the 23rd. Yeah, here it is. It was the ES. So on a down day, I am sitting here. I tried to buy it here, tried to play the reversal here. I got stopped out. I tried to play the reversal here. Where did I try to play it? Yeah, right here. I got stopped out. Now, what if I had not stopped myself out? When I finally got the win here from, it was at least a 3-1. I think I give it a 4-1 up there. So that was the win. Okay, so I took 2 losses and a win. All right. What if I had just left on my position here? What if I'd gotten tired of stops not working for me? Well, if I had gone long here, I would have sat here and let this go down on me and just let the losses pile up, pile up, pile up. And I would have only made a break even trade. Now, how often have you as a trader been waiting for that break even to just get you out? Like, please, please just give me break even. Please just give me break even. That's all I want. I won't ever do it again. You pray that you make promises that you're never, ever, ever going to get out again. Well, first of all, what happens if that's your strategy? If your strategy is you take massive losses to the point that you literally puke and have to close it or you get liquidated, and all your wins are break even, are you going to make any money? No. So stops are not bad. I hate losing. I hate losing. I hate losing more than I like winning. But I recognize the value of not bag holding. It sucks. It sucks sometimes to take a stop. It sucks every time to take a stop out because it's a loss, but it keeps you in the game and it lets you stay neutral when you're not with the trend until finally you get a setup that actually works. And so that's two separate things. If you're trading at the wrong time of the day, you're either getting screwed by the spread, you're in a consolidation, which because you're in a slow time of the day. So just stop. Like, figure out what the most liquid time of the day for that product is, and then do it. And then the other side, of course, have a strategy. And secondly, stops are not bad. Stops are not bad. What happens is you take stops and you get very pissed off at them. You get this mindset that, like, oh well, I don't want to use stops because eventually it comes back for me. It'll let you do that. The market will let you do that. It'll let you do it a lot, especially in a trending market, and you just happen to be taking trades in the direction. It will let you have your money back. It will let you have wins. It'll give it to you. It'll give it to you. Or the ones you stop out, it will reverse it and be like, ha ha ha, you shouldn't have stop. And then it's going to take all of it at once. It lures you into a bad habit. The market will teach you bad habits if you don't force yourself through discipline to have good ones. It will teach you bad habits, and then it'll take it from you. And so you're better off just saying, okay, getting stopped out sucks, but I'd rather be stopped out when, and I use this example a lot because I was in this. I was in Zillow off of a 50% level, and I got stopped out here. It was shares, so I stopped myself out, and then I saw it recover a little bit. You even had, I think, a little bit of a recovery here prior to earnings, but look how much better I am having taken the sucky stop rather than being down another 40, 50%. That's why you use stops. I hate losing too, but I really hate losing half of my capital on something, hoping it comes back more. That's it. Let's go through. Actually, wow, the hour's gone by fast. Let me go through all the questions here. Is there anything I really wanted to drone on about? I guess these will be videos this week. Okay, let's go through the comments and we'll start wrapping things up. What is the name I use for retracements, not fib right? Yes, it is the Fibonacci tool in TradingView, as a matter of fact. The only thing different is if you go to the settings, you can double click on it or click the little gear, wherever it may be. And I just have taken off all the extras. My brain only fits in here. I can only process one retracement level, and it just happens to be the best, in my opinion. Other people may love their 5 or 6 Fibonacci levels. I just turn it off. That's all I use. Let's see. Yeah, degen is the word. Waiting for losses. I did that on Ripple last year, and I kicked myself till the date holding the bag. I mean, that's part of your journey, believe it or not. Do you think I was born and I knew to use stop losses? No. Do you think that I always listen to my advice 100% of the time? No. But the market beats me enough to remind me occasionally that that is the smart thing to do. Yeah. Yeah. I mean, it sucks. I hate taking losers. I hate losing. But you got to stay in the game. You got to stay in the game. So I wanted to ask, if you get a stop out of a market, do you have to wait a few hours before getting back in that same pair, or how do you? That doesn't. That's. I have a strategy. I like to play reversals a certain way, incorporating 50% retracements. I wait for something going down, and then I wait for a reaction, and then I take the 50% of that. It's that simple. And so you saw in that example where I was trading the ES, I was trying to go long in a bearish trend. And so I didn't really have a time where I was going to wait between trades. I just took the 3 setups that fit my criteria as they came. And because I believe in my strategy, I'm okay with that. Now, some people, if you take a loss, and I used to be this way. That's why I say get a strategy. It's something you depend on. I would have to, go for a walk or something like that. And if you are still very emotional, if you're still very uncertain and not confident with your strategy, then you may need to do that. You may need to come back and wait. But if you're saying that to me, it basically says I just kind of trade when I feel like it, and I'm wondering if a few hours later I won't feel differently. That doesn't sound like a strategy to me. So I think you really just need to come up with a setup that you trust. Take screenshots of your trades. Start doing that. Start taking screenshots. I mean, I have a whole folder of screenshots. If you watch me on when we're live on Discord in the mornings, I have my screen up. I'll be trading. If I see something interesting, if I take a trade, if I don't take a trade, I'll take a screenshot. I'm constantly going up here in TradingView at this camera thing up here, and I'm either copy chart image and then I paste it into a Google Docs like journal where I write, I write basic comments. I basically take a chart image, copies it to the clipboard. You can paste it into a paint program too, and then I'll type in like "Dear Diary, this setup fooled me," blah blah blah. Or "Dear Diary, this was a good setup, but here's what I could have done differently." Or "Dear Diary, I didn't get enough sleep last night and I'm grumpy and I shouldn't have taken this trade." Things like that. Or you can go and you can save the chart image and just get yourself a repository. And go back at the end of the week, go back at the end of the month, just take screenshots. And it's actually really, really, hold on. So I have many, many books. Over the last 10 years, I have folders of, let's see if you can see this. Hold on. Of different patterns. This is 2018. This is like my options trading from 2018, which, by the way, the reason I knew exactly where it was is because it's on my cabinet of things to look at, because I think this year is going to be good. Like, these are all Ichimoku setups trades that I took. I've got them printed out, white background, so it didn't take that much ink. But I have a lot of these, and this is my trading journey. And I think if you're not taking screenshots, first of all, you're not learning as fast as you can. And second of all, you're going to miss out on saying like, "Hey, look at these trades I took 5, 6, 7, 8 years ago. And look how much more I understand now." You're going to miss out on that if you're not taking screenshots of the patterns that you trade, because you're going to be able to look at it. Like, you may have a bad week or however it can be used for this. You go back and you say, "Oh, wow, like, a year ago I was taking these setups and now I know that setup is actually a reversal." And you're only going to learn that by going back and looking through your old trades, because ultimately with technical analysis, we're not predicting the future. We're trying to find patterns that are repeatable. And so the only way you're going to train your brain to do that is to train it with pattern recognition. So, yeah. All right. Oh, Peter wanted me to look at ADA. Peter, I hope you're still there. Let's look at a few things. If you have any final questions or comments, get them in the chat. So let's see here. Crypto. Cardano. Hey, I'm just going to give you my honest opinion. I don't want to be in it. Let's go out to the weekly even. You have very, very clear support at, it's 101, but let's call it $1. And I mean, it really, really, really respected the $1 level, and now it's not. I've come up with a new term. My new term is the uncanny valley of risk. So it is the uncanny valley of risk. And so that is basically where you are now. Because, and what my definition of the uncanny valley of risk is price at this point for you, if you're in this, can reverse now, reverse here, reverse here, reverse here, and you really don't know where, but I can guarantee you that it will be right after you sell. That's kind of because that's what happens to a lot of people, doesn't it? It's not because the market hates you. It's because you are the market. And so now what you're getting into is this max pain territory. The reason I kind of started talking about the uncanny valley of risk is because of Facebook. A lot of people bought Facebook thinking it would bounce quickly. And the meme I've had for the last 2 weeks is Facebook can't go lower, right? Well, people are in Facebook are in that uncanny valley of risk where it's just grinding down on them and they don't know when to get out because it just hurts more and more, and it's going to hurt more if they get out and it reverses. But going back to this other example with Zillow, when do you get out? You're basically like, when I see something like that Cardano, I basically see this. I see this chart right here where I decided to get out of Zillow because I didn't want to find myself in the uncanny valley of risk. Because, yeah, sure, I can draw a line here and be like, okay, it'll probably stop here. Okay, it'll probably stop here. Okay, so you can try that, but that doesn't really mean anything because you really wanted this thing to go up from here. Your stop was really back here. And now it's broken through all these really optimistic cases for you to finally get a reversal. You don't know where it's going to reverse. And so I can't tell you when this thing's going to reverse, nor are you going to know. But when it breaks a major support like this and really kind of starts trending down off of it, there's no good place for this thing to reverse. I mean, I don't give people hard and fast, do this, don't do this. But I would not. I would be out. I would be out. And if it were to maybe reverse as soon as I got out, I would be a little pissy, of course. But I would just wait for it to come back and conquer this level, maybe pull back, maybe even take a breakout here, and then you'd be safe. And then you'd be able to maybe play that upside of it if you like it. But you just don't know where this thing's going to come down to. You just don't know. All right. Don't lose money. Don't lose your stake. Don't lose your line. A speculator without cash is like a store owner without inventory. Word. Cash is your inventory. Yeah. Oh, Jesse Livermore, you have this framed on your desk. Jesse Livermore, he is a goat. Greatest of all time, for sure. You're welcome, Jeff. That's why I do this. All right. I needed to hear that about stops, Mega Dick Day says. I quit using them and now holding sizable bag, not into capital. Yeah, I just don't like bag holding. You can't make any good decisions when you're bag holding. For some reason, I DYOR, do your own risk, take the trade, and something happens hours later that gets me stopped out. Great show, and oh, thank you very much. You think SPX hits 4,000? I mean, yes, if. Thanks for joining, Tispo13. If we break the low that we made Thursday, yeah, yeah, I can see that basically happening. But I talked about this at the beginning of the show. Right now, you've got a false breakout. A lot of people thought short. They're in trouble. And the most probable, highest probability scenario is that you maybe get a little pullback in here, and then we're going to go up to retest the high. So that's my assessment. But you're right. If we break this low, then yes, I could see this going to 4,000. Yes, that's a good level. But from here, anything can happen, but we'll see. A third spike to the downside? Hey man, anything can happen. I'm the last couple of weeks have made me incredibly distrustful of rallies. So I don't blame you. Every rally in the last couple of weeks, like all these rallies up in here, they've just failed out. But I'll be watching. I'll be watching for a setup. But for right now, based on this, my mindset is bullish. So that's just mindset I'm in. So let's see. Just chatting. What we got? The Discord lizards here have questions. Waiting for losses. What do I use in toss? Oh, I think he already left. To draw profit targets. Actually, someone asked a question earlier, and we'll finish this up. I'll use this example, and I talked about this at the beginning. In this setup in particular on the markets, it's the same as any other setup that I like to do on false breakouts. I like to set up a stop when you have a false breakout like this. And so where I would put a stop would be, of course, below this low right here. Let's use the drawing tool. And so a good way to do is look for some kind of a spike like this, and then look to, well, if we had to go long, we can go there. And so there we have our stop, because we know if we break that low, it's not a fail breakout, it's probably a real breakout. And so from there, we can then assess what is our risk reward. And I think that's the most important point of this. This, by looking at this as a spike, it doesn't tell me where it's going to go, because I'm not trying to predict the future. It just tells me where my stop needs to be. You can even see it here on the SPX back in November, where you had a short setup. The November SPX did the reverse, where you had a point right here where you need to have a stop. And so you basically try to get in a pullback, maybe on the next week. All you need is a stop above there, right there. Boom. The reason is because you had this price action here in the week of November the 22nd, 2021, closed above it. Excuse me. Price went above it. The wick went above the prior all-time high. And then within that week, it closed back inside the range. So now we have a tradable setup. So what we look for is a little pullback in here. Well, we don't want to, we can jump it, but I like to see a little pullback. And then you can say, I want a 2-to-1, which, if you're using the drawing tool, the entry to the stop, there's your risk. And then you can size your reward accordingly. Or you can use like maybe a potential, like this last all-time high right here as a target, which was September. So that makes a really nice trade. It's a nice 2.5-to-1 trade. And so there you're able to capture that move. And so I really had to kind of be it, because if you would have stayed in for 3-to-1, you would have probably gotten stopped out here. And this is one of those things that makes people mad, because of course that was the top of the market, but you didn't know that at the time. And so now we have a similar sort of setup here, where you basically are looking for this to be a false breakout, because we had the low here that really defines it, the 24th, January 24th, spike below it. That's just like it's spiking above it here, closing back inside this range, go long, and we want to play that thing back up to the high, get a nice little 2-to-1. I'm going to be looking for a little bit more of a granular level in here, but I'm bullish as long as this trade on the daily of the markets plays out. And that's where I'm going to wrap it up. Thanks for joining me, everybody. This should be available for download. Make sure that you do your like, share, subscribe, all that stuff that makes my message trying to help people out get out to them. So come talk to me in Discord.